Guys, can you feel the tension? The market is frozen. We've just closed out 2025, and right now, many of your portfolios look like a total mess. Some things pumped, some things dumped 99%, and you're asking yourself one question: what the hell do I do next? Well, I have news for you. Arthur Hayes, the legend himself, founder of BitMEX, and arguably the most insightful macroeconomist in crypto, has just released an emergency warning, and you're not going to like it. Or, conversely, it might just save your capital. Hayes claims, the era of buy any shitcoin and get rich is over. In the next 2 years, the market faces a total cleanse. 99% of altcoins will vanish or turn into zombies. Only the Magnificent Five will survive. Just 5 assets that Arthur is betting all his millions on. His target for Bitcoin? $500,000 by 2027. And this isn't clickbait. It's a cold mathematical calculation based on what the Fed and the Donald Trump administration are cooking up right now behind closed doors. Today, we are going to break down every word of his new essay. We'll look inside his portfolio. We'll understand why he's betting on Zcash when everyone else has forgotten about it. Why does he need Ethena? And why does he believe Bitcoin is the only exit from the looming debt catastrophe? Get ready. We are diving deep into the mind of Arthur Hayes. Part 1. The Macro Trap. Why 500? Before we get to the coin list, we need to understand the logic. Why is Hayes so confident in growth if 2025 was so difficult? Look, all of last year we lived under what Hayes calls the frowny cloud of liquidity. The Fed kept rates high. Treasury bills were paying 5% APY. Money big, smart money sat in the dollar because they were getting paid to do nothing. Why risk it in crypto when you can get risk-free yield? But now, in early 2026, the rules of the game are changing. Hayes points to the main factor: U.S. national debt. It has become unmanageable. Interest on the debt is growing exponentially, and the new Trump administration has only one way out. They can't default. They can't cut spending because that's political suicide. The only path is inflation. They need to devalue the dollar to make the debt easier to pay off. They need the re-industrialization of America, and factories aren't built with a strong dollar. Hayes predicts a massive restart of the money printer, but they won't call it QE, quantitative easing, so as not to scare the public. They'll invent a new complex term, something like reserve management purchases. But the essence is the same. Trillions of new dollars will flood the system to buy up government debt. And where will this money flow? Stocks? Partially. Real estate? Maybe. But the cleanest, fastest pressure release valve is Bitcoin. Hayes writes, Bitcoin is the smoke detector in the burning house of fiat currency. When they print trillions, Bitcoin doesn't just rise, it reprices. A price of 500, 0, or even 750, 0 by 2027 isn't so much Bitcoin's success as it is the collapse of the dollar's purchasing power. Arthur warns, during this moment, volatility will be wild. They will try to shake you out of your positions at every step. But if you understand the macro picture, you just hold. You don't sell your fire insurance when the house starts smoking. So the foundation is set. Devaluation is inevitable. But what exactly do we ride in this tsunami? Hayes has chosen 5 assets. Let's break them down one by one. Part 2. Asset 1. Bitcoin, the king. No surprises here. Bitcoin is the base. It is the largest asset in Hayes' portfolio. Why? Because it is the only money in the world with a fixed supply. Hayes calls Bitcoin money of the gods. Everything else is credit. Everything else is someone's liability. Bitcoin owes nothing to anyone. The logic is simple. When the system starts bursting at the seams, institutions, BlackRock, pension funds won't run to buy meme coins. They will run to Bitcoin. It is digital gold. Hayes advises keeping it simple. If you are a beginner, if you have little time for analysis, just buy Bitcoin. This is your ticket to the art. The target, as we said, $500,000 per coin, and that is the base case. Part 3. Asset to Ethereum. Now, this gets interesting. Arthur Hayes, who has recently frequently criticized Ethereum for being slow and expensive, still includes it in the Survivors 5. Why? Solana is faster, and there are newer blockchains, right? Hayes is a pragmatist. He calls Ethereum the internet bond. Look, Bitcoin has no yield. It just sits there. But Ether, if you stake it, pays you a stable percentage in more Ether. For large funds, this is critical. They need not just capital preservation, they need cash flow. Ethereum is the only crypto asset that has a giant ecosystem, is recognized by regulators, ETFs are already live, and actually pays dividends to validators. Arthur believes the rumors of Ether's death are greatly exaggerated. Yes, it might lose market share in small transactions, but it will remain the foundation for serious finance. That's why ETH stays in the portfolio. Part 4. Asset 3 Solana, the People's Casino. If Ether is Wall Street strict and expensive, then Solana, according to Hayes, is Las Vegas. It's Dubai. It's the place where life is happening. Hayes is a huge fan of Solana. He openly says, if you want to trade, if you want to gamble, if you want to launch projects, you go where it's cheap and fast. Solana won the war for the retail user. All the hype of 2024 and 2025, all those crazy meme coins, NFTs, DePIN, projects all of that lives on Solana. Hayes forecast, Solana will continue to eat Ethereum's market share, specifically in the mass adoption segment. It is a high beta asset. What does that mean? It means if Bitcoin goes up 2x, Solana might go up 5x or 10x, but it will also fall harder. For Hayes, SOL is a bet on crypto adoption by normal people. Part 5. Asset for Ethena. Ethena, the synthetic dollar. Now we move to real insider territory. This isn't just a coin, it's a project Hayes invested in early, and which he considers revolutionary. We are talking about Ethena and the ENA token. What is it? It's an attempt to create a synthetic dollar that doesn't depend on banks. Look, USDT and USDC hold real dollars in banks. If the bank collapses, they have problems. Ethena does it differently. They take Ether as collateral and open a short position on an exchange. It's a complex mechanic called the delta neutral strategy, but the essence is simple. They create a stablecoin, USD, that generates yield. Right now, just by holding this dollar, you earn interest. Hayes is confident. In the future, when banks start failing again, and they will, the world will be desperate for a dollar that lives only on the blockchain. Ethena solves this problem. For Hayes, the ENA token is a bet that this protocol will become the new stablecoin standard, displacing Tether. The growth potential here is huge multipliers, because the stablecoin market cap is in the trillions. Part 6. Asset 5 Zcash, the bet on freedom. And finally, Arthur's most unexpected, controversial, and punk bet. Zcash. You might ask, Arthur, seriously? Zcash? That old coin everyone forgot about? It's getting delisted from exchanges. That is exactly why Hayes is buying it. His logic is frighteningly convincing. We are moving toward a world of central bank digital currencies, CBDCs. Governments want to control your every transaction. Bought the wrong food, donated to the wrong blogger. They will see everything and can freeze your account. In this new Orwellian world, privacy will become the scarcest and most expensive commodity. Bitcoin is public. All transactions are visible. Zcash is mathematically guaranteed anonymity. Hayes believes Zcash is currently extremely undervalued. As soon as the digital dollar or euro is implemented, people will start looking for ways to hide their savings. and Zcash will become their life raft. This is a bet against the system. It's a bet that humanity isn't ready to live under the thumb. If Hayes is right, Zcash awaits a renaissance comparable to Bitcoin's growth in the early years. Part 7. Bonus AI and GOAT. Of course, Arthur wouldn't be Arthur if he didn't add a little madness. In his essay, he mentions another sector that stands apart. It is the marriage of AI and crypto. He told a story about the meme coin GOAT, Goatius Maximus. When he found out this token was being promoted by an autonomous AI bot, he bought it immediately. Why? Because robots don't have bank accounts. The artificial intelligence of the future will use crypto to settle payments between themselves, and most likely this will happen on Solana. Hayes advises keeping an eye on the AI meme coin sector. It's a casino, it's a risk, but it is precisely there, at the intersection of technology and human stupidity, that the fastest fortunes are made. Conclusion. Action plan. So, let's wrap this up. 2026 and 2027 will be historic. We will see the sunset of the old financial system and the explosive growth of the new one. Arthur Hayes gives us the map. Bitcoin for wealth preservation, Ethereum for yield, Solana for speculation, Ethena as the new financial system, Zcash as insurance against digital slavery. He warns, don't spread yourself thin. Don't look for the next Bitcoin in the trash cans. Concentration is the key to success. Liquidity will flow into these specific, proven vessels. Right now, while the market is quiet or fearful, is the best time to review your portfolio. Ask yourself, do I have assets that will survive the storm? If your portfolio consists of coins with dogs and frogs, maybe it's time to listen to the man who turned trading into an art form. History is being written right now. Don't be a spectator. Make sure to write in the comments, though, you believe in Bitcoin at 500K. And do you have Zcash in your portfolio? I'm really curious to know how many of us private investors are out there. Smash that like button if this breakdown was useful. Subscribe so you don't miss out when that flood of liquidity finally begins. Profits to everyone, and see you in the next video.